One of the stocks in focus yesterday was Angel One. It reported a very good set of numbers and the stock was up about 6%. Remember, there's a lot of volatility in the capital markets, and despite that, the revenue and the EBITDA saw a double-digit growth while the margins also expanded. The total client base also rose by 10% sequentially in the operational data for Q4. To discuss more on this and the way forward, we have Dinesh Thakkar, the Chairman and Managing Director at Angel One. Mr. Thakkar, always a pleasure speaking with you. Thanks a lot for joining in on CNBC TV 18. You know, there are many positives in the numbers this time around. Thank you, sir. You know, the cost-to-income ratio, though, is the lowest that we've seen in the past many quarters. So that's a great thing. Just wanted to understand whether it's a sustainable trend. In Q4 of this year, your cost-to-income ratio fell to about 42.5%. Do you think it can fall further? And what do the trends look like over the next few quarters?
See, we are not focusing more on improvising our cost to revenue ratio, because we want to focus more on market share. So this time it was better because there was one reversal of ESOP cost, which was not a big amount. But primarily what I wanted to say is that we are into kind of an investment mode where we would be focusing more on getting market share or getting more wallet share from a customer. So we would be happy to sustain this kind of margins and focus more on growth.
So can you give us some numbers on what the strategy has been so far? How much market share have you been able to grab, say, in the last 1 year? And on increasing wallet share as well, what would that mean in terms of numbers over the next 6 to 12 months? Yeah.
Today, our market share in incremental market, the client is around 21 to 22%. So definitely we are focusing to be number one, so it has to be much higher than that. On active NSE customer base, it is 13.1, which is improving every quarter on quarter. So our focus would be that we should achieve a similar kind of number of market share what we have in new client acquisition. So overall, our strategy would be to, now that last quarter we launched Super App, so we are ready with introducing more services on this app. So last quarter, we introduced mutual fund journey, and we achieved a SIP of around 42,000 in new SIP. So that is where our focus would be, how to gain more wallet share, how to sell more services to the same set of customers. So our focus would be to gain market share plus gain wallet share by introducing more services on our app.
All right. Hi, Mr. Thakkar. Good morning. There were recent changes with regard to margin requirement that was introduced by SEBI. That will increase the working capital levels. Could you quantify it? What could it increase it by?
We have disclosed that number. Impact on our profit and loss would be around 40 crores because we have to raise more capital to have a proper kind of structure in terms of working capital. The upstreaming of the same client fund is not going to impact our float income or anything, but only we will require additional capital to maintain bank guarantees and all that.
Mr. Thakkar, hi, good morning. Sorry, the upstreaming of the cash, is that the same proposal, basically ABSA for client funds? Is that what you're referring to?
No, ASBA is different. Upstreaming is different. Upstreaming is going to happen in next quarter. So we have calculated impact based on upstreaming, where clients' FDs and everything is allowed to be upstream. Upstream would be totally fine. Client has to keep fund in their bank account. So that's a total different mechanism. There's no clarity in terms of when they are going to implement this. So we haven't worked out impact of that or what would be an impact on industry on that.
Yeah, no, that potentially perhaps is also will lead to more competition overall. I mean, more costs as well for brokers if that were to become a reality. The SEBI chief seemed very keen on the proposal at the last press conference.
Prashant, we feel that all these regulatory changes are needed to expand the market in India. If you look at our market, retail participation in equity, it has been very low. The reason is that people don't trust this market. There has been lots of scams and irregularities. So we welcome this kind of steps, because we believe all these steps are going to increase kind of participation of retail in this equity market. If you look at performance of equity market, it has been great. But still, we don't understand what is the reason people don't come to the market. The reason is that they are too fearful about keeping capital over here. So my belief is that all this introduction is going to increase volume participation in the market. There will be some increase in cost, but we have seen in past also lots of regulatory changes has happened, which appear to be kind of very severe. But what we saw is that everything increase in cost was offsetted by increase in volumes and participation.
Okay. Mr. Thakkar, eventually it boils down to how much revenue, your revenue per client can go up by, right? And if you look at the last 4-5 quarters, it's been on an average around this 400 to 450 rupees per revenue per client. I'm just trying to understand whether there's scope to build on to that. And if yes, how do you plan to do it? How much can the average go up by over the next few quarters?
So the average will not go up, it will come down, in fact, because if you look at new acquisition that we are doing in an age group of around 25, and we are going to tier 3 and tier 4, where actually wallet size is a bit lower. But what we look at is business metrics. What is the cost of acquisition and what kind of a lifetime value we can achieve. So we don't focus on average revenue that we get from a customer, because there are different cohorts. As I said, if we acquire a customer from urban or tier 1, their ARPs, that ARPU is higher than customer who comes from tier 3 and tier 4. And if you look at profile customer who are 35 and around, and today what we are acquiring, mostly 90% of people are in that range of tier 2, tier 3 and around the age of 25. So their participation in market is lower than urban and tier 1. So that we are not focusing on. ARPU from this customer, we are looking at lifetime value is far higher than a customer who's coming at the age of 35.
All right. Final question then before we let you go. Your CEO, Mr. Narayan, he had resigned a couple of months ago, citing personal reasons. When does the replacement come in?
We are looking out for a right candidate. As I said, that we have to look at the future of next 3 to 5 years of Angel, where we are transforming ourselves from...
By when could we hear a big announcement, sir, since you all are already looking out?
It is very difficult to say the date, but search is on, I would say.
So by the first quarter, we'll hear it?
I can't give a confirmed date because it's a very senior position. We have to find the right candidate.
Okay. Sure. We wish you well on that, yeah.
Mr. Thakkar, just one last thing. If I just look at earnings expectations from Angel, 23 over 22, I mean, I'm looking at a few sort of analysts who cover the company. They've penciled in about between a 25 and 35% growth in 23 over 22. And 24 over 23 is more flattish. There is some growth, but very muted kind of growth. Could you just give us, I mean, if you can give us numbers, that's great. If you have anything in mind, or how to think about this?
See, this is analyst view, so we would not be able to give any number in terms of future, because we don't give future projections and all that. But what I believe this industry would be growing at a far more better rate than what it was in FY23. FY23 was very lackluster year. So I'm expecting this growth would be better next year. And based on that, I'm expecting industry is going to grow higher than what it grew last year. And always we have been gaining market share. So overall, I see a lots of positive growth in coming years also.
Okay, all the best, sir. Thanks a lot for joining in and speaking to CNBC TV18. Appreciate your thoughts. And, that's some optimistic views coming in from Angel One. They're saying the industry is expected to grow much more than it did last year. And, of course, talking about the nuances of the business as well. Let's get back to